$50,000? That's how much one wrong move can cost you when buying a home. The worst part? Most of these mistakes are completely preventable. Buyers just don't know what to watch out for until it's too late. Today, I'm breaking down 11 mistakes that drain home buyers' bank accounts and exactly how to avoid every single one. The first big mistake I see buyers make is not getting pre-approved for a mortgage. This is where it all starts going wrong. So many buyers begin house hunting before they even know what they can realistically afford. They fall in love with a property, make an offer, and then find out they cannot secure the financing. Meanwhile, they've lost time, lost leverage, and in a competitive markets like Toronto and the Greater Toronto area, they've lost the house to a buyer who came prepared. And let me be clear, pre-approval is not the same as pre-qualification. Pre-qualification is a rough estimate. Pre-approval means a lender has actually reviewed your income, your credit, your debts, and they're committed to a specific amount in writing. Here is something Canadian buyers specifically need to know. You'll have to pass the mortgage stress test. That means you need to qualify at either your contract rate plus 2% or the Bank of Canada's qualifying rate, whichever is higher. This can significantly reduce what you're approved for compared with what you might expect. That pre-approval document tells sellers you're serious. In a multiple offer situation, it can be the difference between winning and losing the home you want. Next up, not understanding how your down payment actually works. A lot of buyers think they need 20% down or they can't buy a home. That's simply not true. In Canada, the minimum down payment is 5% on the first $500,000 and 10% on any amount above that, up to the insured mortgage limit. But here is the trade-off. If you put less than 20% down, you'll need mortgage default insurance through CMHC, Second, or Canada Guarantee. That insurance premium gets added to your mortgage, and depending on your down payment size, it can be thousands of dollars. On the other hand, some buyers drain every last dollar to hit that 20% threshold, and that's equally dangerous. The moment you close on the house, life doesn't stop. The furnace breaks, property taxes come due, and if you empty your savings, you're one unexpected expense away from serious financial stress, or worse, high interest debt. Know your options. Look into programs like the First Home Saving Account, the Home Buyers Plan through your RRSP, or provincial first-time buyer incentives. Build a strategy. Don't just throw everything at the down payment and hope for the best. The next one can be devastating: skipping the home inspection. In hot markets, some buyers waive the home inspection to make their offer more competitive. I understand the temptation, especially in bidding wars, but this is one of the most dangerous gambles you can take. A home inspection typically costs between $300 and $600. That small investment can uncover problems that would cost you tens of thousands to repair. Foundation cracks, knob and tube wiring, mold, a failing roof, plumbing issue hidden behind the walls. And here is something important. Even if a home is listed as is, that doesn't mean you should skip the inspection. A lot of buyers see as is and assume it's a lost case. It's not. You absolutely still have the right to inspect the property. The seller is not obligated to make repairs, but if the inspection reveals major issues, like a bad roof or structural problems, they're legally required to disclose those to future buyers as well. And here is where it gets interesting. You can still negotiate, even on an as-is listing. If the inspection turns up something serious, you can ask for a price reduction or a credit toward repairs. I've seen it work countless times. A chimney in terrible shape, a failing HVAC system. Sellers will often negotiate when they realize the alternative is disclosing the problem to the next buyer anyway. If you're in a competitive situation and feel pressure to waive the inspection, consider a pre-offer inspection before you submit your bid, or include a condition with a short timeline. Some provinces have been pushed for stronger buyer protection around this, so know the rules in your area. Here is one that flies under the radar: not checking whether renovations were done with proper permits. This one flies under the radar for lots of buyers, but it can be incredibly costly. If you're buying a home that's had renovations or additions, you need to verify that proper building permits were obtained for that work. Without the correct permits, renovation may not meet local building codes. And that's not just technically. It can lead to fines, insurance problems, and serious complications when you eventually try to resell the property. In Ontario, for example, you can check permit history by contacting the local municipality where the property is located. Many municipalities allow you to request this information online, or your real estate agent or lawyer can help you with it. I've seen cases where a garage had been converted into a living space without permits. That kind of unpermitted work can create insurance nightmares and become a major liability. The seller is required to disclose unpermitted work, but it's ultimately your responsibility to verify. Don't take anyone's word for it. Check the records yourself. Mistake number 5, another costly one, is failing to dig into the property's history of damage or insurance claims. Just because a house looks fine today doesn't mean it hasn't had serious problems in the past. One of the costliest mistakes buyers make is not digging into a property's history of damage or insurance claims. In Canada, you won't have access to a clue report like buyers in the US do, but there are still ways to uncover this information. Ask the seller directly for their insurance claims history. Review their disclosures carefully. A good home inspector can spot signs of past issues, patch walls, moisture stains, and even flooring that suggest previous water damage. You can also check municipal records for any water-related or building-related work orders on the property. Multiple past claims can also affect your ability to get insurance on the property, or they could significantly drive up your premiums. If they have been damaged from storms, fires, or flooding, you need to know about it before you close, not after. Uncovering this history can save you from inheriting someone else's poorly repaired problems. This one catches people off guard: skipping the property survey. You would be surprised how many buyers overlook this step. Whether you're buying a condo, a townhouse, or a detached home, a property survey is critical. A survey shows you the exact boundaries of the property and whether any structure, fences, sheds, decks, even parts of the house itself are encroaching on neighboring land or easements. Without a survey, you might not realize that the beautiful fence the seller built is actually 2 feet onto the neighbor's property. If the seller doesn't have an existing survey, you can request one from the land registry office or commission a new one. Yes, it's an added cost, but it's far cheaper than a boundary dispute with your new neighbors after you move in. A survey can also reveal whether the property is in a flood zone, something that directly impacts your insurance costs and risk. Don't rely on the seller's word on this. Verify it through official flood maps and municipal records. Now, this one can cost you tens of thousands, accepting the first mortgage rate you are offered without shopping around. Most buyers walk in their bank, accept whatever rate they are offered, and call it a day. That is a massive mistake. Interest rates, penalties, and mortgage terms vary significantly between lenders, and even a small difference can have enormous consequences. Half a percentage point might not sound like much, but over a 25-year amortization, that could mean $50,000 or more in additional interest. That's real money. And don't just compare the interest rate. Look at the full picture. Some lenders offer a seemingly lower rate, but when you factor in fees, closing costs, and restrictive terms, it ends up being more expensive in the long run. Ask about all the fees involved: application fees, appraisal costs, and any other charges. Here is a tip a lot of Canadians don't know. Consider working with a mortgage broker, not just the big banks. Brokers have access to dozens of lenders, including credit unions, monolith lenders, and private options, and they can often find better rates and more flexible terms. Also, pay close attention to prepayment penalties, especially on fixed-rate mortgages. If you need to break your mortgage early, some lenders will charge you an interest rate differential penalty that can run into tens of thousands of dollars. Ask about this upfront. It matters. A huge one that blindsides buyers: underestimating what it truly costs to buy and own a home. Here is a mistake that catches people completely off board. They focus entirely on the purchase price and the monthly mortgage payment and forget about everything else. In Canada, closing costs alone can run between 1.5% to 4% of the purchase price. That includes land transfer tax, which in Ontario and British Columbia can be significant, legal fees, title insurance, home inspection, appraisal fees, and adjustment for prepaid property taxes or utilities. Speaking of title insurance, don't skip it. A title insurance policy protects you from hidden liens, legal claims, or title defects that surface after you've closed. If the seller had outstanding property taxes or undisclosed lien against the property, without title insurance, you could be on the hook. It's not expensive and it's essential. And once you're in the home, the costs continue. Property taxes, homeowners insurance, maintenance, utilities. Budget 1 to 2% of your home's value every year for repairs and upkeep. If you buy at the absolute top of what you're approved for without accounting for these costs, you're going to be house poor. Budget for real numbers, not just the mortgage. First-time buyers, check if you qualify for a land transfer tax rebate in your province. It can save you thousands. If you're finding this helpful, do me a favor and hit this like button. It helps the channel more than you know. And if you're not subscribed yet, now is a great time. Alright, let's keep going. I see this all the time, letting your emotions take over during the buying process. Buying a home is emotional, I get it. You walk into a place with a great natural light, a gorgeous kitchen, maybe a backyard you can already imagine spending summers in, and suddenly logics go out the window. Emotional buyers overbid. They overlook red flags. They skip due diligence because they are afraid someone else will get their house. And in a market like Canada's, where bidding wars can push prices well above asking, this is especially dangerous. The best home buyers treat this process like a business transaction because that's actually what it is. They have a checklist. They have a budget ceiling they will not exceed. They walk away when the numbers don't work, even if they love the house. And here is another thing. Always check the seller's disclosures carefully. The documents tells you critical details about the property, the age of the roof, furnace, and major systems, any history of flooding or fire damage and known issues. Read every line. If something looks off, ask questions. It's far better to ask now than to discover a problem after you've signed. You will find another house. You will not easily recover from a financial mistake that follows you for 25 years. Mistake number 10. Don't overlook this one. Not getting every agreement and promise in writing? This mistake causes buyers more often than you think. During negotiation, there are verbal promises, casual agreements, and assumption, and if none of it is in writing, none of it is enforceable. Do you want the washer and dryer, the refrigerator, the custom windows covering, that built-in shelving unit? Don't assume it's included just because it's sitting in the house during the showing. If it's not explicitly listed in a purchase agreement, is not yours. I've seen buyers show up on closing day expecting appliances and fixtures to be there, only to find them gone. The seller took them because they were never formally included in the contract. Work with your real estate agent and lawyer to make sure every item you expect to stay with the property is documented. This also applies to any repair credits, conditions, or promises the seller has made. Get it in writing every single time. And one more thing, consider asking the seller about the home warranty. These warranties typically cover things like furnace, major appliances, and plumbing for a set period after closing. Some sellers will even pay for it as part of the deal. It's worth asking, especially on the older home. And finally, the one that has derailed more deals than you believe, making big financial moves before your deal closes. The one has derailed more home purchases than people realize. You're under contract, closing is a few weeks away, and you think everything is locked in. So you go out and finance new furniture, or you switch jobs, or you open a store credit card for some appliances, and then your lender runs a final verification, which they will, and suddenly your debt ratio has changed, your credit score has dropped, or your employment cannot be verified. And just like that, your financing falls through days before closing. I've heard of buyers who open a Home Depot credit card to get ready for a new home, and that single new credit line was enough to jeopardize their mortgage approval. It happens more than you think. In Canada, this is especially critical because most mortgage approvals are conditional, and lenders can and do pull back funding if your financial picture changes. Keep your financing completely frozen from the moment you go under contract until closing day. The furniture and the renovations can wait. We cover a lot of ground today. 11 mistakes that can cost you thousands, even tens of thousands of dollars. But here is the good news. Every single one of them is avoidable. Buying a home should be exciting. It's a milestone, but it should also be informed. So slow down, do your homework, work with qualified professionals, a good realtor, a good mortgage broker, a good real estate lawyer, and never let urgency override your judgment. If this video helped you, hit that like button and subscribe so you don't miss the next one. I'm putting out content every week to help you make smarter decisions with your money. Drop a comment below and tell me which of these mistakes surprised you the most? Or if you already bought a home, which one did you learn the hard way? I read every single comment. Thanks for watching. I'll see you in the next one.